Hello, and welcome to the Coaches Lounge with yours truly, Barbara J. Beckley, your purpose and visibility strategist. And today we have a wonderful show interview discussing with some amazing spotlighting experts that advise us for life and business in any kind of area that they coach in. So just real quickly, I created this show because it was birthed, and now I'm thinking about it. It's been now 3 years I've been doing this show, and it's been birthed because I really wanted to give coaches, consultants, and educators some love. I'm just going to be honest. I never really seen a show that, spotlighted coaches and really just getting to understand what they do and how they help others. Think about this. Coaches and educators and consultants, they are with you every step of the way. From the beginning, when you were like, oh my God, can I do this? To in the middle, to maybe I can, I'm moving forward, to even at the end when you're like, yeah, I got it. Or then you go back down a little bit. Those coaches are with you all the way, right? They stay with you. They encourage you. They keep giving you the knowledge. They keep telling you can do it, you can do it, you can do it. Why not spotlight coaches? They're the ones that get you to other levels. Right? They're the ones that help you to that. So I want to make sure I had a spotlight show to spotlight these awesome coaches. And when I have women on, I call them queens because I look at them as royalty. So today we have a wonderful queen that I've been knowing for a while. And I was just thinking the other day that I've been knowing this lady for a few years. I think almost 4 or 5 years. I was like, wow. So when I know people longer than 1 year, I look at them as family. I do. I really look at them as family. And I want we should be there for each other. And this wonderful queen, she is amazing in the industry of finances. She really, truly, I'm telling you, she has a heart for wanting individuals to be financially sound. And don't everybody want to be financially sound in their area? I mean, whatever age group that you're in, be it if you're just starting your 20s, 30s, or even in your 60s or even 70s or 80s, and you're saying to yourself, do I really have enough money? Am I really saving up? Can I really do the things I want to do? Well, we're going to get a little bit conversation with that with this wonderful lady. So Mrs. Tracy Oriyomi, she is a financial educator that teaches individuals and businesses how and about money and how money works. Think about that. Put that in your mind when she was talking. She offers solutions, strategies to ensure that her clients have a solid financial foundation. So she's not playing, and she's been doing this for over 20 years. So that's telling you something right there. She's just not somebody that just did an hour ago and took a test somewhere and said, for an hour and said, okay, I got this. She's been grinding in this industry for a while. So let's get a chance to know her a little bit from her clip video, and then we will see this wonderful queen and we will talk to her and just learn some more information from this expert. We'll be right back.
If you wait 10 years to start investing, you actually are losing $100 every day for every 10 years that you wait to start saving, which is over $300,000 in retirement savings.
Every time I see that video, it just lights me up. Hello, Queen Tracy. How are you doing today?
I'm doing wonderful, Barbara Beckley. How are you?
Yay, Tracy's in the house. Well,
Thank you for having me.
I'm doing wonderful because you're here. So before we even start talking about you and how you're just lighting up the world and being a lighthouse to the world when it comes to finances and just loving on people to make sure that they're in that, in that stage of life, I'm humbly saying thank you for coming on the show. I truly appreciate it. You taking the time out to do it today. So thank you. Thank you. Thank
Well,
you.
thank you for having me. Pleasure to
Yes.
be here.
So, I really want to get into this because I know, like I said, I just said a minute ago, we've been knowing each other for a while. I mean, we met through other sources, other friends and networking. And, to say that you can know a person for that long and then really be in their world and see what they do and how they're transforming, because you have transformed a lot of individuals, Tracy, when it comes to their finances and really understanding how's your money working. I love how you say that. How is your money working for you? So before we get into that, can you just, I always say I like to pull the cover to say, okay, why are you just so passionate about this? To give people that haven't heard your story, and then we can get into some questions on how to make your money work.
Thank you for that, Barbara. Yeah, so I started out actually in a different industry. I started out initially as a computer programmer, and I was downsized. The company that I was working for went through a big reorganization, and about 300 people were downsized, and I was one of the 300 people. And I decided this will be a good time for me to start learning about money and how money works, because my grandmother taught me so much growing up about money and how to look out for my future self and how to make sure that I don't spend everything that I made. My grandmother only had a 5th grade education, but she was a master of her money. She was a no matter what woman. She experienced tragedy after tragedy after tragedy. But in spite of that, she took care of her money and she taught me the value of a dollar. And that just stayed with me.
I love it. I love it. Well, first, I think I don't remember this, but I forgot that, yeah, you was downsized where 300 people let go and you were one of them. And I forgot that you worked at computers. So thank you for bringing that up, because from that and then changing over to say, you know what? I think I need to really dig into my passion, what I like. And then your grandmother. Every time I hear your grandmother's story, I want to tell you, Tracy, I feel like she's my grandmother too. I have adopted her because I think about, what she instilled in you and your family and left a legacy to the point where it seeps out to others. So thank you for telling us about your story, about your grandmother leaving a legacy in your life, because now that is trickling down in other people's lives.
Absolutely. And Barbara, the fact that she only had a 5th grade education, she said, Tracy, if I only made $5 a week, I saved $2. So she saved over 50%, almost 50% of her income. Although she never made any money, she was able to save an incredible amount of money. So it's not what you make, it's what you keep.
And the discipline. It sounded like the discipline was there for her.
Absolutely. Absolutely.
Because how many times? Oh, sorry, go ahead.
No, she said when she was about 35 years old, she realized that one day she was going to get old. And she just started saving her money at age 35.
Wow.
And Barbara, when she died, she had CDs all over the place. Not music CDs, bank CDs all over the place.
She did her thing. And from learning, I mean, you couldn't help but learn from that. That's amazing. That's amazing. I like how you said not CD players, but CD banks, like
bank
money
CDs all over the place. So, like I said, it's not what you make, it's what you keep.
It's what you keep, right? And then, like I said, being consistent with it. And like she said, after 35, she's like, nope, I got to change the trajectory, and I got to do it, right? Wow. Now, I was going to ask you, because there's a lot of different misconceptions and myths about money, that we encounter. So I was going to ask you, Miss Queen, how do you address them in your coaching sessions? Like when you're talking to people, when you're counseling people, some people's like, how the old saying goes, well, I got to spend my money because it's hot in my pocket, so I got to let it go. This little myths and stuff about money. How do you kind of get through that with people to show them that, you can make your money work a certain way where you're saving?
Well, Barbara, a lot of people say money is not important. But are your lights important? Is your water important? Is your rent or your mortgage important? Money is important. In fact, there's a scripture in the Bible that says money answereth all things. If you need to if your car breaks down, what do you need? Money.
Mm-hmm.
If you get laid off and you still have to pay your bills, what do you need? Money.
Mm-hmm.
Money is important.
Yeah. Yeah.
And you have to make sure that you're paying yourself first.
Yep. Definitely.
And that's what I tell everyone, pay yourself first. Money is important.
So I love how that sounds like one of your go-tos in your coaching sessions or your counseling sessions with people is you need to make sure you pay yourself first. Now, do you get any kickbacks from people saying, well, you just don't understand, Queen Tracy, I owe all this, or I got to pay this and I don't have no money to pay myself first. Do you ever hear that from people?
I do. And you have to reprioritize. It's not that you don't have it. You just have to look at where it's going. Mm-hmm. You have to police your money. Mm-hmm. And most people are not policing their money.
Yeah.
You have to police your money. You have to give your money an assignment. Mm-hmm. Instead of you asking where it went, you tell your money where to go. Mm-hmm. Instead of asking where it went. So it's important that you police your money. In other words, you have to track your money.
Track your money. Now, have you had times where people, because I'm just going to be honest, I've been there before where the money I was making that was coming in was it was the right type of amount of money I was getting, but then my things that I owed, like my bills and stuff that I had, was over how much I was bringing in. So I was going to ask you, how do you talk to an individual, like you said, police your money, where sometimes you can't police it because it's like, okay, I have to pay this or else. Do you have certain ways of telling people how to, get through those challenges?
Well, what I see with a lot of people, Barbara, is that they're in a lot of debt. Mm-hmm. So it's very important to work on paying down your debt. Mm-hmm. And you can either use what they call the debt snowball method to pay down your debt, mm-hmm. where you look at, for example, your credit card with whatever credit card has the highest interest rate, mm-hmm. you pay that off first. Mm-hmm. And then once that's paid off, the money that you were paying on that credit card, use that towards the next credit card with the highest interest rate. Mm-hmm. Or you can use what's called the debt avalanche method, whereas you pay off the credit card that has the lowest balance. Some people like to pay off the credit card with the lowest balance because they can see the progress a lot faster.
It's like a debt.
Right. You're paying off the debt with the highest interest rate. Yeah. So you can do one or the other, whichever one works for you. But I recommend paying off the debt with the highest interest rate because so much of our money is going towards interest.
Yes.
A large percentage.
Yeah.
A large percentage of our income is going towards interest. Yes. It takes 60 days. It takes about 60 days to run up a credit card to the limit, to its limit, and about 20 years to pay it off.
Wow.
Because most people are only paying the minimum payment.
That 35 or 25, yeah.
Right, which is basically just going towards the interest. So,
wow. And you think about that. And see, you know what? Now that you say that, Queen, because I think about, okay, let's talk about credit cards with a high interest. Like you said, you're just paying that low amount. But I'm thinking, okay, let's just use like a car. Okay, see, people, they finance a car. You got to be careful on what contract you're signing when you get a car, because and I've seen this before where you put it in financing and they don't tell you, because it's like in little small wording where it says, well, this is an interest loan. So for like the first 5 years, you're just paying towards interest. You're not even paying on.
You're just paying interest. Yeah. Because a lot of people are only concerned about the monthly payment. Well, what's my monthly payment going to be? And even at the car dealership, they'll say, well, what do you want your monthly payment to be? But it's really the interest that you should be concerned about, not just the monthly payment, because you can pay that monthly payment for 6 or 7 years, and you paid for the car twice with interest.
I know it is. You got to be careful. You got to be really careful. And that's why I love what you do, Queen, is being an expert in finance, is just looking at all of that, and then if you're okay, a lot of people, they might be in debt, but moving forward, forgive yourself first. Don't beat yourself up, because that's not going to get you anywhere, right? And then at that point, start using strategies to get you out little by little.
Absolutely. So that you can save for your future self.
And pay yourself first.
Pay yourself first, just like you pay your bills. Pay yourself. Add yourself to your bills.
Yeah.
Have that money coming out every month or every 2 weeks.
Yes.
And have that go into an account for yourself.
I always tell people, Queen, I was going to ask you this too. When I tell people, pay yourself, put in a whole different account. And some people, they like, okay, and they do it. And then all of a sudden you see them kind of going in that account, pulling. I'm like, you need to get an account that you can't take nothing out for 6 months.
Absolutely.
Am I right? Would that work too?
That will work. Yes.
Yeah. Because people have a tendency of, okay, I paid myself, and then they know it's there and they know they can get it. So sometimes it's a bit discipline again. It goes back to the discipline of the person.
It goes back to the discipline. And that's your sleep at night money, your emergency fund. It's important to have that, because we saw with the pandemic, what happened with the pandemic. So many people, lost their jobs, like 40 million people.
Yeah,
lost their jobs. You got to have that emergency fund. I like to call it your sleep at night money.
Sleep at night. Yeah, they'd be like, I feel so comfy right now.
Money you can put your hands on in the middle of the night if you need to.
Yes, that emergency money. Yeah, definitely. So now, talking about that real quick, like you said, make your money work for you. Do you advise people, how much money would advise a person to save up? Like every 6 month type of pay, or how would you tell a person how much money?
It's actually going to be based on your monthly expenses.
Okay.
If we're talking about an emergency fund, and it's recommended that you have 6 to 12 months worth of expenses set aside for emergencies. It used to be, the rule of thumb used to be 3 to 6 months of expenses set aside for emergency. But as a result of the pandemic, that has changed. It's now recommended that you have 6 to 12 months of expenses set aside for emergencies. So if your expenses are $3,000 a month, you should consider having $18,000 a month set aside for emergencies. Because what if something happens and you can't work for 6 months?
Yeah.
You still have to pay your bills.
Yeah, you still got to live somewhere if you're paying a mortgage or a rent. If you
right. Or something happens with your business, or you become incapacitated and can't work for 6 months.
Yeah, because even if you're getting paid at your job, they go down with the percentage because of how much, if you're like on disability or whatever, they might not pay the 100% to you. Yeah. Right.
Typically, you receive 60% of your income. But you still have 100% of your bills, to pay.
Yeah, Queen, that never goes away. That never goes down a percentage, does it? It's always going to be 100% of your bills. Everything else is like, it could change. Absolutely. So you're right. That's interesting, Queen. I'm glad you said that. That was a good golden nugget because it was before they said 3 to 6 months. And now it's 6 to 12.
6 to 12 months. As a result of the pandemic, things have changed.
Yeah.
Significantly.
Now, Queen, I was going to ask you, can you share, because I know you deal with a lot of wonderful people that, like I said, you help them in this area, including me. You don't even know that. You've been mentoring me because I listen to your daily Tuesdays. I listen to all that. I take all notes from you. But can you share like a success story from where you work, significantly with somebody that changed their financial situation, and give us some things that you implemented with them?
That's a great question, Barbara. So I had a lady who's a single mom, and she didn't think she could afford to put any money away for her child. And I said, what if something happens to you? You're a single mom, you're the breadwinner. If something happens to you, what happens to your child?
Yeah.
And I just sat down with her and had her reevaluate her finances.
Mm-hmm.
She was eating out all the time. So I had her cut out all of the eating out because she was spending about $200 a month eating out.
Ooh.
And I said, you're spending $200 a month eating out. Do you realize you can take $100 of that, put that in a Roth IRA because she didn't have any money for retirement. Her job didn't offer a 401k or anything.
Mm-hmm.
I said, take $100 of that or even $50 of that and put it in an IRA.
Mm-hmm.
So she decided to put $50 in an IRA. And then she decided to open up a life insurance policy in case something happened to her. Her child would be protected. And her child would have money to live in case something happens to her. So she took care of her retirement in the event something happened to her. And she was able to take care of her child, put money away for her child in the event she didn't come home one day. Her child would be set.
Yeah. Now that's some wonderful strategic tips that you gave her, and she succeeded in that. That she, and I was thinking when you were saying about the success of this young lady, the mother with the child, that I feel like, and you probably work with people with the mindset part, because I think before you can kind of get into what avenues or what vehicles you can use to save money, all that stuff, you have to change the mindset of a person, right?
Absolutely. Like she didn't think she had the money, but we found $200.
That's what I'm saying. That's why when you said that, I was like, see right there. She probably would have kept on going if you didn't mention that to her. Yeah.
Absolutely. So it's just a matter of reevaluating, rethinking what's important, because some things we think are important are not important.
Yeah, I found that out too. I always ask myself, even with whatever I'm doing, if I'm buying or something, whatever, I'm like, okay, is this really needed? Can I do this a different way? Can I wait on this? Can I go somewhere else to get it? I mean, there's just other things I think about before I spend a certain amount of money on something that might be something that I can wait on. And I'm not saying that you should always not, you can give yourself some things sometime, but if it doesn't make sense, then you have to rethink that. Yeah.
Absolutely. You said the operative word, does it make sense?
Yeah.
It has to make sense.
Yeah. I mean, there's been a time, Queen, you'll probably laugh at me with this, that I had went to get me like maybe a blouse or something like that, the clothing store. And I said, ooh, that looks nice too. So maybe I went one blouse, I got like 3. And I get home and I was in there. I was like, okay, Barbara. And I looked at my, closet. I had these blouses. I was like, okay, what are you doing? I'm telling myself this. I'm like, why you just go out and buy 3 other blouses? You got all these blouses. And some of the blouses, Tracy, in my closet still had tags on it. So you know what I did? And I know this was bad. I went back and I took it back. I said, this was not making sense. I they do, what's that, buyer's,
buyer's remorse.
Yeah, it's like, I didn't need to do that. I didn't need this right then and there. Yeah.
Well, at least you took it back, so that was good. At least you took it back.
It took a few days, but I couldn't wait too long, because after 7 days, they're like, nope,
Right.
Which I understand that too. But yeah, that's that mindset. I had to really, but it took me on a journey to say, okay, maybe do that next time, but don't even buy it. You bought it, but you took it back, like you said, right? But maybe the next time it happens, you're in the store and you're like, I don't need this right now. And then you have to even worry about taking it back, because now your mindset is better.
Right. This can wait. This can
wait. Plus you got all these other things in your closet. You're not even wearing them.
Right. You sound like my mom, Barbara. She used to have, oh my God, a closet full of clothes, tags still on them. I'm like, okay, when are you gonna wear this stuff?
See, Tracy, I need to talk to you a long time ago. You would have been giving me a check. Like, what are you doing? See, it takes people to tell you.
And the thing is, Barbara, we, like I said earlier, it takes an average person about 60 days to get into credit card debt or to max out their credit card, and 20 years to pay it off.
I mean, just say that's like a mic drop right there, Tracy, when you said that. I just can't believe 60 days to just run up the car, but 20 years to pay it off.
Stuff
Right?
you're not even wearing anymore. Stuff you've forgotten about, you're still paying for.
Stuff that you probably can't fit anymore or gave it away.
You're still paying.
Still paying for it. Oh,
well, that
God.
happened to me, Barbara, because my first credit card was a Sears card when I was in college.
Mm-hmm.
And I got into credit card debt in college because the credit card companies were at college campuses throwing out credit cards. And I got into a lot of credit card debt. Yeah. And I was only paying the minimum payment.
Yeah.
Because I thought all I needed to pay was the minimum payment. Mm-hmm. And it took me forever to get out of debt, forever. Mm-hmm. I know you said learn later in life, I can pay more than the minimum. I don't just have to pay the minimum. That's a trap.
It is a trap because they do teach you that. I mean, when you think about it, because the same way with me with my credit cards, they say pay the minimum 25. So okay, I could 25. I'm thinking in my mind 25 a month. That's good. But then understand that it was a trap, like you said, Queen, to get you to keep paying them because all you're paying, like you said, is towards interest.
It's interest.
Yeah. Mm-hmm. So you could have a $300 credit limit, spent $300, and taken 20 years to pay off a $300.
Yeah, $300, and they'll say, "Oh, you only have to pay $5," and it's gonna take you forever.
Oh boy. Well, Queen, I've been loving this conversation. You taught me some other stuff. I've been taking notes as we've been talking. And everybody out there that's watching this, hope you got your pen and paper out and taking notes from this wonderful expert Queen. But before we close, I want to make sure you get just a little time to have any lasting thoughts for the audience. So I want to take myself down. I'm going to leave you on, and you give any other thoughts that you have, and I'll be right back.
Okay. I want to let you know that if you don't pay attention to your money will leave you. It's like a relationship. If you want a good relationship, you have to pay attention to your mate. So if you want to have a good relationship with your money, you have to pay attention to your money or it will leave you. Now, you should be saving the equivalent of 1 hour of your pay per day because you're going to be working on average 90,000 hours over your lifetime. 90,000 hours. So you should be saving the equivalent of 1 hour a day of your pay. The average person is only saving about 22 minutes a day of their pay. So make sure that you pay yourself first. It's so very important. And remember, if you don't pay attention to your money, it will leave you, just like a relationship. If you don't pay attention to it, that person might leave you. So you have to be sure that you're paying attention to your money. Very important. Pay attention to your money. Get on a budget. Have a written plan to get out of debt because debt hinders you from creating wealth. You don't want to be hindered from creating wealth. We're actually supposed to leave money to our heirs because the scripture says that a prudent woman or a prudent man leaves an inheritance to their children, their children's children. So in order to do that, we have to make sure that we're getting out of debt so that we can create the wealth that our family deserves. So spend less and save more and pay down those debts. Did you know that you need $2.5 million to have $50,000 to have a $50,000 a year lifestyle 20 years from now? Think about that. 20 years from now, to have $50,000 a year, you need to have $2.5 million saved. So the number one thing you want to do is pay yourself first and make sure that you are paying attention to your money so that it doesn't leave you.
To your coaches, because they are helping you get to that next level in your life of what you're trying to achieve. See you next time.
Thank you for having me.